I go to market when I've got 15 showings already.
So Matt, that is a common, I'm not going to say tactic, that's a common philosophy right now in the industry, and it has not always been like this. Correct me if I'm wrong. Everybody call in 248-569.
Here?
Yeah,
539-9797.
It goes like this. You put the house on the market, and the first showing is on a Thursday.
Yeah.
And then it goes Thursday, Friday, Saturday, Sunday, collect all the offers from Thursday to Sunday, then evaluate, and then go ahead and respond, counter, accept on that Monday, correct?
Yeah, the reason I do it is because I listed Sunday night because in the MLS, you have two types of buyers. You have ASAP buyers, meaning you get the email for every new house as soon as it goes on the market, and then you have daily drip emails. So I've got if I do it on Friday or Sunday evening around 4:30 to 6, I'll get all the ASAP buyers and their agents right there. They'll get the email. Then they'll also get it Monday when it's just on their daily drip, which is the biggest email. And then Thursday is the other biggest email when people are actively shopping and looking for what they're going to do that week. So by putting it on Sunday night, you're going to get 3 emails for the price of 2. And then you're right. I'm going to probably evaluate offers on Sunday or Monday. And the reason why I like to do that is because the way I tell people to test their lenders, call them when you expect them not to answer their phone. So if I'm going to call lenders on a Sunday, I know that they're going to, and they answer their phone, I know they're going to communicate. They're going to be good to work with.
Who doesn't answer their phone, Lisa Lawson?
You would be surprised.
Yeah. So I call my 2 or 3 best offers on a Sunday, and I see which lenders are going to answer their phone or call me back or at least respond via text. And if they do, cool. They get bumped to the top of the order sheet or the offer sheet. And if their lender doesn't call me back or text me back that night or even the next morning, all right, cool. Well, hey, sorry, you put in a great offer, but if your lender wants to ghost me and not back your offer up, then I can't say that I can't sell your offer to my seller.
Tested. That's it. We're always being tested, right?
Part of the transaction is communication, and how can you be confident that you're actually going to get to the closing table when the other side doesn't even return a phone call?
Yeah, that gets real sticky at the beginning of the transaction. You know what I like, Lisa, about it?
It happens in this industry, unfortunately.
Lisa, did you hear Maddie? Sort of pretty much it's like that house hits the market like on that Sunday. It's pretty much ready to go. It's already been dressed up. It's presented properly and it's priced properly. And then within that Sunday night, as Matt's talking about, to the next Sunday, it's pretty much gone. You're going to get several offers in today's market.
And we were talking about this outside, right? So the days on market has gone up about 40%. It's been like 14 to 15 days, and now it's in the low 20s. It still has to be priced right. You and I were just talking, houses are still outrageously priced. Those houses where people just added 10 to 15% on the list price because that's what they thought they could get back in 2021, people are still doing that, and those are sitting for 30, 60, 80 days
getting price reductions.
Until they get price reductions. And the issue is if I see a house and let's say it's worth like $450 and they put it at $550 because they think they can get it, my buyer's already seen it at $550, and then they saw it at $525, and they saw it at $500. They're waiting to get to $450 because they realize that's not an honest, serious seller. So why am I going to putz out to Romeo or Rochester from Royal Oak, just spend 30 minutes each way to go see a house that we really like, but the seller's not serious, and there's no point in just kind of spending the time or effort, spinning your wheels, trying to get our hopes up just to say, oh, sorry, that's not going to fly.
Mm-hmm.
Yeah, Matt, the market is a serious market right now. And again, April 1st, everybody thinks the market's going to explode again. And the crazy thing is you see in the media, and we talked about it on the podcast, Matt Bush was a guest on the podcast this past week, and I'm holding up, everybody, if you can see it, 2 separate articles. One says the market's hot, one says the market's not. All right, so whatever you read, it is. It's right here.
Yeah.
We have it documented. Bottom line is this, is that in metropolitan Detroit, the market is still hot. There's still a lack of inventory. We talk about it on the podcast. We talk about it all the time. The market is still strong. And if you're going to be late to the party, you're never going to get an offer accepted. You better start doing your due diligence, and you better go ahead, and you have to be pre-approved. That pre-approval letter, will you accept an offer without seeing a pre-approval letter?
Absolutely not.
Yeah.
Because how do I know the offer's valid? I got to either see a pre-approval letter from a valid lender. If I get just some generic PDF that says so-and-so is approved for X amount of money, I'm like, I could have done this. Why bother including it? Or I've got to see a proof of fund statement. Right. I've got to see a bank statement that says shows me to the dollar with your account number, with your name on it, that you're making the offer valid. Because there are 2 sales in the real estate industry. The first sale is when I meet with a seller and say, let me sell your house. I'm selling myself on the seller. The second sale is when I go to the seller and say, hey, I have these offers, and they're going to look at me 9 times out of 10 and say, which one would you suggest? Mm-hmm. And I'm going to sell that offer to the seller. And if I sell them a bad offer and it falls through or 30, 45 days later, the deal doesn't close, I might get fired because I presented the offer that I thought was best and clearly it didn't work out. Yeah. So I'm on the seller's bad side, or worse, the deal goes through. Let's say I've got a $225,000 listing, $225,000 offer. 30 days go by. We have to relist, or we have to take the next backup offer, and maybe it's $212 now. And I just cost my seller $13,000 because I recommended the wrong lender, the wrong agent, the wrong buyer,
the wrong transaction,
the wrong transaction. So that you got to be smart. You've got to do all the vetting.
So
that's why
they
hire us.
Can you tell Matt's passionate about what he does?
You can.
Can you really tell?
Absolutely.
I think he knows what he's talking about.
Well, this is also why back in the day, and we say this now, sometimes when people, like as a seller, right, it doesn't always make sense to get the most money for the house, because that most money for the house might be the weakest actual offer. It might be the offer that has a tentative pre-approval or a pre-qualification and not a pre-approval, and they don't understand underwriting, and it's went online, put in information, got a fake approval, and it's not the same.
All righty. Wednesday promised to be one of the most interesting days. And, of course, the Fed did not disappoint us, Harry. We got lots to talk about. Mortgage rates. Matt's talking about buying and selling real estate, getting your offer accepted. 248-539-9797. We'll be back. All righty, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show in our 23rd year, bringing you the best real estate information available. Again, if you're buying or selling a house, this is your show. Give us a call, 248-539-9797. We are sponsored by Capital Mortgage Funding. We are powered by Fairway Independent Mortgage Corporation in all 50 states, offering you every type of mortgage available, whether you need that reverse mortgage, that renovation loan, FHA, VA, USDA, you name it, jumbo loans included. We have the best rates on jumbo mortgages. That's 726-200 and above. You want to call the great Capital Mortgage Funding, 1-800-LOW-RATE, or join us here on the show. I'm Harvey Freed. Matt Bush joins us, Harry Glanz, and of course Lisa Lawson from our office, here to give you great information. I left the last segment with the Fed. Yeah, they made an announcement on Wednesday, Harry. They continue not to disappoint as they did bump up the Fed funds rate 0.25%.
Well, when you say disappointing, it's disappointing a lot of people, Harvey, because, because truthfully, they've raised rates now 9 times in the last 13 months. And that is way too quick. Way too soon. Rates have gone up way too fast. And what the Fed's trying to do is curb everybody from spending. But let's talk about the housing market in metropolitan Detroit. There's a shortage of houses. So Matt Bush will tell you, if there's a shortage of houses and there are more buyers out there, what does that do to prices, Matt?
Supply and demand. So that
101.
Less supply, more demand.
And prices are going up and rates are going up. So Matt has a nice stat out there. The same house, Matt Bush, last year at this time, somebody was going in. How much more are they paying in a payment right now?
Yeah, so the average house in Metro Detroit in 2022 sold for $205,000.
22 last year, yes, sir.
Last February, the month before they put the rates up. Last month, the average home price was $210,000 after those 9 rates. So everybody who thought, hey,
prices are coming down.
Prices are coming down because they're going to start raising interest rates. Well, they've raised interest rates 9 times, and a year later, the home prices are 2.5% higher.
Yeah.
And after 9 interest rates, that same house, instead of paying about $1,200 on your mortgage, you're now almost at $1,700 on the same house, same mortgage.
Yeah, because, Lisa, there's a strong demand in metropolitan Detroit for, there's a buyer's appetite out there. So sellers are in the catbird seat. Anybody tells you they're not, they are. And yes, there are seller's concessions out there. There's all those kind of things, but you have to find that in your specific instance on that particular home. But basically, right now, what we're seeing is people, the average age of a sale of somebody buying a house is 37 years old or 34 years old.
34, yep.
Which means anybody 27 to 41, that's your range, right? That's your median range.
And if you look at generational populations, that number doesn't start to subside till 2037.
Yeah,
or 2027. I'm sorry.
Yeah.
So we're going to be on this population boom, and it's not going to drop off until 28.
And we always say it on the show: the math is the math, the numbers are the numbers. You can't beat that math. So if there are a plethora of buyers out there and there's low inventory, this is going to continue to cycle upwards, and that's what we're going to see. And we try to tell everybody, Lisa, what are you waiting for?
Right. I mean, we had a little pocket in like January where I think things were becoming a little bit more stable, but we are outside of that pocket. We are definitely in a trend like we were years before, where if you don't get on it now, the sooner the better. I mean, it's really that simple. The longer you wait, the more houses come on the market, the higher the competition, the more you're going to pay. It's just, it's basic economy, right? It's basic the way the world works. So if you do it now in April, you'll probably have a much better position than if you decide to start looking in June. Because fewer people, right, are putting a house on the market. How many people say, I'm waiting until my kids are out of school?
Yeah.
June is like the big thing. So do it now. Take advantage of getting out there and buying the right house when, you've got a few people out there, the less competition you have. So, and
if the rate goes down, you can refinance. Basically,
totally
what you're doing is you're capping the interest rate. It's never going to go above what you buy at.
There you go.
You can always refinance it. Like if you would have bought a house last year, you would have capped it off at 3.75 to 4%. And right now, if you had a 4% interest rate, you're basically Scrooge McDuck and threw your coins in the basement. You've got equity in your house. You've been there for 12 months. You've probably done some home improvements. So even if you bought it on an FHA, you might have that appraisal, that appreciation to get off the PMI, and you might be in a better position, like completely.
So, Matt, nobody wants to hear what happened in the past, in the dark ages, in the early 80s when rates were at 18, 17, 18, 19%. People still bought homes.
Right.
And then throughout the late 80s, rates started coming down, 12 3/4 in 1988, turning into 1990 where they kept going down, 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 down. Now, I'm not suggesting that same pattern is going to happen again. I would never do that. But I will tell you that it's not a bad statement to make. It's not an unfair statement to make that if you are approaching 7% on a mortgage interest rate and you bought that house, that in late 2022 going into, late 2023 going into 24, rates could drop that you could refinance your house and save even more money.
Yeah.
Why wouldn't you do that?
Because
There's
Here's
no
the thing.
answer to that. Why wouldn't you do
But
that?
Harry, say you put minimum down, and 2 years from now, even if the rates are similar, you could drop PMI
Right.
and still save yourself money because of the depreciation that's happening in 2 or 3 years.
Yeah.
So I mean,
There's no housing bubble going on,
Right,
Lisa, like there
absolutely.
was in 2008, 9, and 10. There isn't, because there are so many buyers out there, and the dynamics have changed. It was a perfect storm back then.
It was.
All right, there were too many people losing their jobs. There were things going on
Right,
that were
yep.
unforeseen, Harvey, unlike there are today, where, again, the average age, all right, of a home buyer right now is 34 years old.
And I think NAR just released like 25% of houses are paid off free and clear. Another 40% of houses have at least 10 to 15% equity in them. So you're looking at about 50% of the home ownership pool is either at 100 to like 50% equity paid off. So there's not going to be that absolute rock bottom, people
No.
losing their,
Well, they
all
were-
this stuff because they have all this equity built in.
And back in the day, they had crazy types of loans. I mean, I know somebody who got 125%
Right.
mortgage. We don't do that kind of stuff anymore.
There was a great article in Cranes about that, about the program du jour,
Yeah.
again, or the 2-1 or 2-1 buy down. And I'm telling you this right now, if you're going to pay points, and this is my opinion only, and it's with 34 years of experience, and experience is the best teacher. If you're going to pay points, buy down a fixed rate.
Yeah.
Okay? Keep it fixed for the life of the loan. Use that point money to buy it down on a fixed rate. That's all I'm saying. And keep your rate low forever. Because, again, you never know what's going to happen.
Here I've been telling
Personally-
people, keep your money, even use it
Yeah.
for paying
I
off
agree.
debt. Everyone's situation's a little bit different, and it's worthy to take a look at everyone's situation and then start the educational process. Again, if you hang on to your money and the rates drop next year, well, then maybe not only can you get a lower rate without paying points, if you do pay, you set yourself up for even buying that rate down. There's a lot of
There's
ways
a lot of
to
sellers who are
save money.
advertising the 2-1 buy down, which I very much appreciate, but I don't think they understand that the cost for the seller to pay for that buy down on behalf of a buyer, they could use that same money and permanently buy it down. And sometimes
Right.
the permanent buy down right now is cheaper.
I like that
cheaper.
word, permanent.
Permanent
It's
buy
not a variable. It's not
Correct.
going to be low
One
one
that-
year, 2
Artificial,
years,
yeah.
and then all of a sudden in the third year it's going to go up higher than what the current market rates
Correct.
are right now.
And if you talk
Why
to-
would you do that?
Well, obviously, I don't know. I mean, there's probably a reason. I guess if you're only going to be in the house for 2 years and you know you're moving because you're on a temporary assignment and you know your job's going to send you to a different state, okay, maybe.
We might tell you to
There's
rent.
always a
Hey,
scenario.
look, if you're
Yeah.
only doing that for 2 years, we might just tell you to rent
Yeah,
it out.
absolutely.
There's always a scenario, right? I mean,
Absolutely.
but for the most part, right now, the permanent buy downs are cheaper.
All right, give us a call. We want you to join the show, 248-539-9797. You can reach us all weekend long at Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Matt, the numbers don't lie, although I keep reading different articles. Harry's reading the same articles I'm reading. One will say things are dynamic, and the other one says not so much. Existing home sales did jump, though. It broke a 12-month pattern, and February's numbers did come in, snapping that slide. Largest increase in a while compared to a year ago. However, sales have retreated. Of course, sales are about 22 to 25% less, probably in our region,
Yeah.
but the price has gone up.
Yep.
And now is the time, Matt. It blows my mind sometimes. We get like 50% of the clients, they are excited to buy. They've already talked it over. They've got their plan. They don't want to rent anymore. And then the other 50% are sort of, figuring this whole thing out. So again, get more knowledge behind you. If you feel like you've talked to a lender and you still sort of have all these questions out there, don't lie to yourself. It's okay not to know the answers, especially if it's your first or second time. Make the extra phone call.
You got to find someone you trust in the industry and then just start a conversation. I just ran numbers. That same first, that house that you're going to rent with your boyfriend, girlfriend, partner, whatever the relationship's going to be, you're going to pay a month and a half security deposit and your first month's rent. You're going to pay roughly $5,000 to $6,000 just to get into that rental property, and then it's going to be 100% interest. I can find somebody down payment assistance where they're not even putting that much down to close on a house, and they're starting to build their equity.
Totally.
So we're kind of at an equilibrium right now where you can rent or buy for the same price, both your down payment as well as the monthly. So, people don't want to worry about, or people are worried about like maintenance and care that they don't want to have to do lawns. They don't want to have to worry about a roof, all these other things, a furnace or whatnot. But you guys were talking, let's find concessions. Let's get that roof replaced. Let's get a home warranty for $400, $500.
Yeah,
to
so
where-
Matt
that's
and
what home
Lisa.
warranties are
So
for.
Matt and Lisa, the old adage is, I can afford the monthly payment, but I can't find the down payment.
All the time.
Okay,
Yeah.
but you guys, Lisa Lawson is down payment assistant queen. All right, and you guys know where all the down payment assistance money
so
is, right?
many programs.
And you can find you can always find the down payment for rent. Why? I mean,
Yeah.
it's a month and a half minimum in Detroit or Metro Detroit rather, and you're going to still put your first month's rent on there.
And those
So you're
security
2.5 months.
deposits are going up, right?
Yes.
They're not
Absolutely.
going down.
And they're
going
adding
up.
cleaning fees. They're adding pet fees. They're adding all these things that don't count as a part of the security deposit because they're not, directly called security deposit. So it doesn't have to be on that 1.5 months.
So on
range.
average, what are you seeing somebody, even to rent a place, has to come up with up front?
$5,500 to $600 or $6,000.
Yeah.
Okay, so I mean, you can get a new house for that. We know that.
Yeah, that's 3.5%. That's 3.5% plus closing costs. You're looking at maybe 4 to 5%. If you get $7,500 to $10,000 from Mishta, you go through an extra class, you go an extra underwriting. Which, if you have a seller's agent who's competent and can explain to their seller what's going on, you're going to come to the table with 1 to 2% max. So on a $200,000 house, you're looking at bringing about $2,000 to $4,000 to close, or you're bringing $5,500 to $6,000 to rent it.
Yeah.
What I mean,
Lisa, you'll find that money for somebody, won't you?
Oh my gosh, absolutely. So we talk about Mishta all the time. It's one of my favorites, but there are so many other programs, even city-specific programs out there.
All right,
Hundreds.
let's do that, Lisa. When we come back, we'll even talk about it. We ran to that Port Huron one. There's
Yep.
all sorts of different opportunities out there. All right, becoming a homeowner can feel like an exciting new chapter. You shouldn't take on home ownership until you're ready. We'll get you there. 248-539-9797. Come on back. All righty, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show. Man, is it gloomy outside today. That's okay. You can give us a call, 248-539-9797. You can always talk about mortgages and real estate, buying a house. Matt Bush joins us, RE/MAX First. Great guy. Fun to talk to. You know, we got Harry Glanz, Lisa Lawson. Give us any of us a call here at 248-539-9797. Matt, we started the show off with something that really, and I wanted to do a nuts and bolts show. Yeah, it's raining outside. Awesome.
Yeah, this is real
you
estate
came
weather.
out. Yeah, you said that's great for real estate.
I want to be in my house when it looks like this. I want to be outside when it's nice.
You know, you can see that they don't have downspouts. You can see that there's water pooling in between the neighbors. You can see there might be a serious water issue. You can look in the attic. You can see if things are leaky. You can look in the base. This is really a home run. And for folks that are going to be multiple bids on these houses tomorrow, okay, take a look at what it looks like today.
But you know what? This weather is going to keep so many people from looking at houses today. So this is the weekend to get out there to that house. Because you know what? There's not going to be 40 offers on it because people don't want to leave their house in this weather. They want to cuddle up by the fire, read a book, watch some March Madness, and say, we'll deal with it next week when the weather's nice.
But I like that perspective, and people are really thinking about it now. I think you woke people up and they said, wow,
Maybe that's why
is
they're
a
not calling us,
great
right?
idea.
Let's see houses.
No, you're waking them up. They're saying, listen, everything looks great in the sunshine, right? Everything looks great, sunshine. And
Good for
sunny.
sellers,
Great.
Harry, yeah.
It looks great. House looks great. You can cover a lot of things up. It looks good. The flowers are up. But in this weather, it exposes any deficiencies that house has, Matt. And then that way you can go, oh, my. Can you imagine if you're a seller of a house right now and it's raining and if you have water or some kind of leak going on and somebody says, oh, boy, I hope they don't see the leak. I hope they don't see the water pooling in the basement in that corner where there are five, there are
We're talking
pools.
about 10% of probably the sellers out there here. I'm sorry to say. You know, the homes are
Flipping out
older
right
here. I actually wrote that down. What is it? Nearly 80% of the single homes in the U.S. are at least 20 years old, and half of them were built before 1980.
Yeah, we're
home
like
renovations are out there, man. You're going to have to save some money to get it fixed up.
We're a 1950s. We're like a post-World War II community here, right? Everybody, if you probably bought a house in the last couple of years, it was probably built between like 1953 and 1966. So you're in an old house. You need to do those updates. Buying those ugly houses, I call them grandma houses, that gives you all the time to put in that sweat equity. You might have ugly carpet, but hey, rip it up. There's probably pristine hardwood under it that grandma never saw because she moved in and put hardwood down, or she put carpet right over that hardwood.
Listen, I told this story, I think, a couple weeks ago on the air. I bought a house. First got married. I bought a house. It was yellow aluminum siding.
You always say that.
Yellow
You painted
aluminum
it.
siding with a brown roof.
Okay.
Okay.
Wow.
House had great bones. Walked into it, said, beautiful. This house is ugly enough where I can buy it. I can get a good price on it. And I did. And my wife thought I was crazy. But then guess what she did? She fixed it up. Looks good. Fine. I mean, we sold it after that.
Yeah.
But, you can't look. Aesthetics are one thing. Good bones on a house are another. If you got, that's why we always preach what? Get that home inspection. You got to have that house checked out. Who cares if it has that orange carpeting? I hear that orange and green carpeting is coming back.
What?
I hear
I
that.
like the orange.
You
I
hear
don't know about the
that? I hear that
green.
orange. No, yeah,
Missed
go
that
check it
memo.
out. I hear that nasty olive green stuff's coming back.
Hey, I want to throw this out there because we live in the great state of Michigan, and even driving in this morning, they were talking about Mackinac Island and all the cool stuff up there. They got a couple new restaurants up there. All right, whippy do. Second home, vacation homes, whether it be in Michigan, Florida, anywhere. Call us. Let us get you set up for it. The region is unbelievable. The tranquility that Michigan offers, of course, not near my neighborhood, anywhere where you could hear me in yelling distance, but the tranquility of living near the water, a golf course. We have wide open areas, and it throws in the USDA loans for the first-time home buyers, for your primary residence, but for second homeowners. I know people chasing the snow even today. They're headed up north trying to get that last couple miles on the snowmobile. That's a lot of fun. We got fishing and golf. Met Darren yesterday. We talked a little bit of golf over there at the bank. Not to mention the popular locations for second homes all over the U.S. It's fun, Lisa. Home ownership is really fun and exciting.
Yeah, I mean, especially if you have the ability to get away for the weekend. Some people are, get off work at 5 o'clock on Friday, and they have the ability to go up north and really enjoy a second home, and it makes it feel like you're on vacation, all the time. So if you have that opportunity, it's 10% down for a second home. Give us a shout. We're happy to help. But I really think that it's a market that people, I think, are a little shy away from. I'm not exactly sure why. And why not rent it out during the week? Even if you have a second home you want to use on the weekends, who says you can't rent it out Monday through Friday?
Then it becomes a business expense if you're making money from it. So a lot of that stuff can be written off.
Right.
Oh,
So
here we go.
so many things you can do, but definitely, like I said, whether it's here in Florida, second homes, if you're interested, give us a shout.
I promise not to talk about it. My girlfriend keeps beating me up about this stuff. The Northern Lights here, it's been the talk of the town here. So we're north enough where I guess we could see it. Now, if you get about an hour north of the Metro Detroit area, you get a better shot. I don't know. I did a little looking up these solar flares, the aurora, the borealis here. These are some big words out there. I don't know the man, Galileo, but he did some cool things, the famous astronomer. And I guess if you head all the way to the UP and even at the top part of the Lower Peninsula, it was dynamite. Lisa, you and I aren't into this crazy stuff. The photography and the pictures were absolutely stunning.
Have you seen Northern Lights in real life?
I have never really seen them. Maybe at Lake Huron a while ago. Yeah.
They're pretty cool to see. I saw them maybe 5 years ago, and I have to say, it does kind of take your breath away. And we're pretty fortunate to live in a state where, we've got 4 seasons, a ton of coastline, an amazing downtown Detroit city life. You can see the Northern Lights. I mean, we really have it all here in this state.
Saw a lot of folks hanging out at Cross Village up there off of M19. No doubt about it. The Legs Restaurant. What a great place.
Yeah.
Again, just when you get up
Good
there,
Polish food.
you feel like you've just gotten away from it all and maybe let the stress
It's only a few
off.
hours away.
Yeah, and very affordable still. So I was sitting down with Harry at our office, our IT guy, John, and we were taking a look at, he bought a place up north. And, of course he made a ton of money on it. He bought it for nothing. It's worth double now. These are the stories out there.
But it's a lifestyle, though, right? You want to go up north in the
great.
summertime if you're a hunter in the winter. I mean, listen, metropolitan Detroit and the state of Michigan as a whole has a lot to offer. Great Lakes State, we've got plenty to do around here. If you're a skier, if you're a hunter, if you're a golfer, if you're a fisherman, all outdoors. It's great around here, and that's why, you live here your whole life and you enjoy it. Yeah, can you travel other places, but it's always great to come back home.
Absolutely. And I love to travel. Everybody who knows me, I travel quite a bit, and I will never leave Michigan. Michigan will always be my home. We have way too much going on here.
Lisa, let's talk about this down payment assistance. No doubt about it. Most of the families out there struggling to get that down payment, that funds to close. Again, we can show them a different way, but I often get phone calls, and it's like, I always say, I go, well, how much money are you working with? I'm proud of these folks. They picked up the phone, and a lot of times the answer is not what I want to hear. It's $2,000, it's $5,000, it's $7,000.
Or I'm just starting to save now.
That's not a good one either. But, again, we have programs that'll get you in, and it takes a while to save that kind of money. And you know what, Lisa, even when they say they have $10,000 or $12,000, they might be able to get in the house. We still look at the down payment assistance program because we don't want to wipe them out and leave them with nothing.
Absolutely. I had somebody call the other day, had $30,000 to work with, and I said, well, you qualify for down payment assistance. Do you want to use it? I laid it out. Here's what it looks like with. Here's what it looks like without. Let them make an educated decision for themselves. He chose to use it so he can kind of maintain a nest egg. Took him a very long time to save that money.
Yeah,
he had a lot of
keep it.
anxiety about spending it. So for him to maintain and keep that nest egg was all he needed to move forward.
But even at $7,000 down, that's going to get you a great starter house. That's going to get you in the Royal Oaks, the St. Clair Shores, Roseville is coming up huge right now. Communities right around Detroit, you can easily get into those communities with $7,000 down with your down payment assistance. Get your kid into good schools. Get out of that apartment. Get out of that condo. Get yourself a backyard for the dog. Get your kids, some neighbors that they can, run up and down the street with, ride their bikes.
Well, people just filed their tax returns, and a lot of people are getting refunds. And so instead of signing another lease to get into another apartment for a month, use that refund. It's probably going to be a few $1,000s that can get you in.
Or that could be the first $1,500 to $2,000 of paint that you're going to buy,
right.
Carpet you're going to reinstall, appliances.
There you go. Keep going, Matt.
Walk in, you can get a full set of kitchen appliances for like $1,800, like delivered and installed. So like you walk into a house without appliances, bam, my refund just paid to finish my kitchen, and all I need is $100 in paint, and I've got a whole new paint, new kitchen, new cabinets, new appliances. I'm ready to go.
Start listing all the functionalities of a house. Hot water heater, let's go for it. Furnace, air conditioning outside. There's a lot of ways to spend money on a house. Hey, look, it's not for everybody, but it should be. Owning a home provides a path to long-term financial security. It's the vehicle in which you transfer wealth to future generations. This isn't made up stuff. I deal with a lot of clients. The parents are even willing to help. And Matt, and especially in today's marketplace, as we're talking about down payment assistance and just getting the money to own the house, you might need an extra $10,000 or $15,000. No doubt about it. Those listings are getting bumped up a little bit because of the lack of inventory, and clients that want to get that offer accepted. Let's face it, Matt, it's $5,000 to $10,000 over listing in a lot of occasions, in a lot of them.
It could, but that's where who you work with matters too. If you work with a part-time agent who's only showing houses on Fridays and Saturdays, they don't have the relationships with the list agent to call them to say, hey, what's going on? Where's your seller at? What's their motivation? They don't know that you call, hey, I've got a lender like Lisa Lawson who's going to follow up after my call and say, hey, we've got a qualified buyer. Here's where we're at. Because like Lisa talked about earlier, just because the offer is $5,000 or $10,000 more from a .com that you've never heard of, doesn't mean that's an actual offer or that's going to close. Right. So by communicating with the list agent and them knowing me, because we've done work in the past, by knowing that I've got a lender like Lisa who's going to get the deal closed, she can go and tell her seller, hey, yes, you've got this pie in the sky at 4.25, but that might not close. This 410, I can guarantee you my life on it that this is going to close and this is going to move your family into that next chapter of their life. So it's all about who you work with. Because if you're just working with your cousin's friend's, sister, and you're just doing a family a solid and you're not working with a professional, like we talked about taxes. Yeah. Am I going to do my accountant a solid? Am I just going to work with my cousin's friend because they do taxes on the side?
But it's a tricky market right now. It's a tricky market. You need that experience. And experience has been the best teacher for everybody. And that's a great saying. But in reality, right now, it is a difficult market. Mm-hmm. And if the market right now in February, March 2023, it's like this, what do you think it's going to be like in April, May, and June? All right, it's going to get stickier. You need to be working with people that have that savvy, that experience, that street smarts, that have been through this kind of roller coaster ride before and know how to navigate it.
All righty. Hey, we're up against a quick break here. Yeah, things are heating up. Well, come and join us. 248-539-9797. The housing crisis, it's in the middle of the country where rent is outpacing. People are spending 30% of their income on their rent and their housing expense. We're going to try to save you money. Keep it here on 97.1 The Ticket. We'll be right back.
All right, Becky's calling in now. Harvey, will you let him know? She's calling in right now.
Alrighty, and a good morning to you. If you're just turning us on, it's the Hardcore Mortgage Real Estate Business Show. We are brought to you by Capital Mortgage Funding, sponsored by, for the last 23 years on the radio and in your backyard for over 31 years here, Capital Mortgage Funding, 1-800-LOW-RATE, the best mortgage banker. Of course, we're powered by Fairway in all 50 states. We will offer you the best mortgage for your situation. That's key. Everyone's situation is a little bit different. On the phone right now, the queen of all mortgages, Becky Alley. Hey, Rebecca Alley, how are you?
Hey, what's going on, everybody?
Are you out there floating in the river? What's going on? We got some rain down there. What do you got going on?
Yeah, I'm like living in a van down by the river.
That's what I wanted to hear. Becky, saw you in the office a couple of times this week, and you were jamming on the computer. It's busy. You're busier than most, but it's busy.
Yeah, it's definitely busy. Buyers are understanding, like this is the opportunity. This is the time to buy. People are understanding that, building home ownership is where it's at. One of the things, too, I've heard a lot this week, and I know Matt's really big on that, building that generational wealth. I actually have a couple transactions where brothers buying brother's home, the other brother's buying grandma's home, because they're eliminating that competition that's out there right now. So there's a lot of that going on. I know Matt's always big on preaching on that topic.
Amen.
Well, something cool about that, Beck, too. You obviously know the condition of the property and some of these fortresses that were built a long time ago. Ask the Europeans, man. They got things over there that are built for thousands of years and are holding up. So definitely if the home is built right, keep it in the family. Fix it up the way you want. I like that idea. Beck, another thing we've been seeing is a lot of the buyers out there are pretty savvy. They're thinking about hanging on to their house again. They see rents going up and they're like, you know what? We'll buy the primary. If we qualify to buy a new house and hang on to our old one, we might be able to make some money.
I love that you just said that. It's something that I preach on all the time when, you're hearing individuals say, well, I have a rate that's 3.875 or I have a rate that's 3.5. Why do I want to pay a rate that's in the sixes right now? That's great. Keep that 3% interest rate, convert that into an investment property. Let's build your real estate portfolio.
Absolutely.
But why stay in a home that is too small for you when we can get you in the next great home?
Yep.
Especially when appreciation's in the 5, 6, 8% in some markets. It's just paying for itself. I've got a rental in St. Clair Shores. My mortgage is $900. We're collecting $1,800 a month in rent. Like
huge.
It's a great way to just get a little bit of passive income, pays the bills on the other house. Gives me a little bit of nest egg to keep doing my thing.
Yeah, Becky,
it's diversification, and Becky knows I use that word all the time.
Yeah, Becky, we just got back from Dallas. We went to a national convention, talked to a bunch of mortgage lenders from around the country, and it seems, though, that in the Midwest, things might slow down on the West Coast, East Coast, everything pushes toward the middle. But here in the Midwest, it's exciting, it's busy, and we heard a lot of people crying the blues, but not around here, right?
No, we're very affordable, and in Michigan, our home buyers, right now you're out there, there's a lot of competition. It's going to get a little bit tougher, too, when it comes into the spring, summer market, especially if rates are projected to slide down a little bit. Hopefully they will. However, anyone that's out there right now, you need to get out there and continue. Don't be discouraged because there's deals to be had out there with these homes because in anywhere else, like outside of us, so the east or the west, things are very expensive. And so I'm really happy to be a part of Michigan where you can drive 3 hours and be in a different world when you're up north on Torch Lake, right? Or you can go to the west side of the state or wherever you're going, but we're very affordable on a lake house. When you can get a lake house under $1 million in a state, that's unheard of if you go to New York, if you go to California or anywhere. You can get a beautiful home on the lake for under $500,000 if you're so inclined to be in that price point, which is also a beautiful thing in Michigan.
Lots of opportunity here. 248-539-9797 if you want to jump in. We'll take all your calls. Lisa, we were going to touch on a little bit of down payment assistance, too, just before we run out of time here. Go with it a little bit, and then we'll go back to Becky.
We were talking about using, people get these tax refunds, and sometimes instead of blowing it on the next big thing or, everyone wants the new tennis shoes or whatever, invest in yourself and buy a house. Usually you can get in for, like we talked before, with pretty much last month's rent or whatever. Instead of using that money to do that and upgrading your apartment, get into a house. Down payment assistance programs are available. There are tons of down payment assistance programs. And
you don't need great credit either. I remember sitting with Lisa back in 2015 when I bought my first house. I had my refund had recently come back, and we looked at where I was. And I was like, I got to pay all this off. And you said, actually, I ran my credit analyzer. We just want to pay this bill. We want to bring this current. We need to pay a little bit here. And then you can keep this chunk and just keep paying your bills a little bit. You don't have to take, that whole refund and blow it on all of these things. Just if you use it smart, you put it in the right places, you pay off the right debts, that's going to go a lot better than just paying off your old Blockbuster debt from 25 years ago.
Yes, and that's what we do. And I'm glad you said it because I never want to tell somebody else's story, but that is actually how Matt and I first started working together. Is he came in, first-time home buyer, and we did some analyzers, and I always say I want to maximize the impact, and we maximize the impact by running the analyzers and using those as a tool to make sure that you can use the least amount of money to increase your credit score the most.
And
It doesn't always mean paying 100% off of everything. And sometimes paying something off actually drops your score because it brings it to a current debt.
and it closes the account
And it
sometimes.
closes the account. So there's a million things, and that's all another reason why you need to call an experienced loan officer. They can explain to you why this is the case and make sure that you're maximizing the score.
So what's the credit score on an FHA right now? The minimum?
580, but if you need down payment assistance, most of them are around 640.
Yeah, so you can still get a
640.
house in the 600s, in the low 600s if you know, maybe not without down
National
payment
Faith Home
assistance.
Buyers, though, there is no credit score minimum with that program.
Yeah, so
for
everybody
down
out there,
payment
hey,
assistance.
Becky, half the economists in the United States think rates are going to go up. Other half think they're coming down. We were just at a conference in Dallas, and one of our main go-to guys thinks that by the end of the summer, rates are going to go down to 5.5. If that's the case, which I've got the over on that, I don't buy that, but let's just say it's true, which it's a win-win for everybody.
Okay.
If rates do go down to 5.5 and you wait, what's that going to do to all the competition that's going to happen? All of a sudden, the buyers going to be coming out in mass, right? So why are people waiting? What are they going to wait for? Because we know in March right now things are heating up. What's going to happen in April, May, and June? Beck, I asked Matt Bush that. I'm asking you that right now.
Listen, I even alluded it as soon as I got on the phone with all my fire, right? We know it's going to get more competitive. We know it's going to happen. So if you already think it's a little bit competitive now, it's going to get worse, and there's going to be more people in droves, especially if the rates do come down, what they're projecting, right? If it does, if the best thing happens, there's going to be more competition out there. So that's why now is the time, because there's not as much competition as what will be in the next 6 months. You can always refinance and get yourself into a program that suits your needs. Because the biggest thing that I want to say right now is this. Anyone that got a 3% interest rate or a 4% interest rate or whatever it was when we had that moment in time, right? They're bragging about that, but they're not bragging about how much over the house they paid for it. So don't be that person. If you're so inclined, get into the house right now, because that way you're beating out that competition. You're not having to go 30, 40, 50,000 over asking, which is really, we're going to be butting up to that here coming up soon.
Hey, Becky, stay on the line with us here and finish it out. We got caller Ken calling in. Hey, Ken, good morning and welcome to our show. Go ahead with your real estate question.
Yeah, good morning, guys. Thank you. I'll be quick. I am the executor on my dad or my parents' estate. My dad owns a home out on Lake St. Clair.
Yes.
Let's say it's worth around, let's say net of the residual mortgage, $600,000. My two brothers and I are, would inherit it. My dad is in failing health, so we're trying to plan ahead. So my thought, both my brothers live out of state, so it may make sense for me to either sell it and disperse the monies, or if I want to keep it as an investment property, let's just hypothetically say my credit is great and I've got the financial wherewithal to get a loan. Could I get a second mortgage or a mortgage on that property? Well, let me back up. The existing mortgage is only at 2.5%, and I am a co-signer on it.
Okay.
So I'm already on the mortgage.
You're already on the
But
title
I
to
would
the
need
house
money-
and the mortgage, yes.
Yes, but I would need money to buy out my brothers.
So you'd have to
on the property.
refinance.
Yeah, you can get a home equity loan. You got hopefully a bundle of equity.
Yes.
I'll let you answer, Harry. I'm sorry.
He's got to buy out his siblings, so he's going to have to do a cash out refinance on that house.
Yeah,
definitely.
Are you in the Shores? Are you in Harrison? Are you further north?
Harrison.
Okay,
Harrison.
yeah. Just be careful. Depending on what you're going to do as far as investment, I know Airbnbs and VRBOs aren't all that welcome on that side of town.
Yeah.
So we can chat if you'd like on the other side of this.
Yeah, and strike.
Give me a call back.
Yeah, strike up that deal. Whatever you're going to pay them out, your siblings, you're going to pay them out. Just make sure you get that in writing, so then the refi can be dispersed properly.
The actual purchase agreement. You're gonna really
Right. If you're going to buy that house from, if you're going to buy them out, then that's what you have to do. You have to make sure, and I'm sure there's paperwork that you're going to get. You're going to have a qualified attorney go ahead and draw that up for you. So.
All right, very good stuff, because hopefully that house is not in a trust,
Thanks,
because
Ken.
you're going to have to get it out of the trust and do all that stuff to do a cash out refinance, but we'll show you how to do that.
And you don't want those property tax uncap either.
Oh, there's another thing there,
Yeah,
too.
you
Okay.
can help it,
Well,
yeah.
keep the ownership right there.
Yep.
All right, 248-539-9797. A couple minutes left. Becky, if you've got some final thoughts, definitely want to hear from you. As Becky, before you say that, distress sales, people used to come to us and say, hey, I'm looking for that foreclosure. Hey, I'm looking for that short sale distress sales. That's less than 2% of the market. I don't even think it exists here. I haven't heard of a giveaway house in a long time. And Becky, give us some quick last thoughts here. We're up against our last couple minutes.
Yeah, I wanted to wrap up the down payment assistance programs that they're talking about. A lot of people think you have to be a first-time home buyer, and depending on where you're looking to buy, you do not have to be a first-time home buyer. For example, if you own a home and you're looking to buy your upgrade home in Royal Oak, you can get up to $10,000 down payment assistance, and you do not have to be a first-time home buyer. We also have another grant program where, let's just say, a spouse owned the house prior to the marriage and now they're buying together. As long as one person on that property is a first-time home buyer, they could qualify for a grant depending on where they live now.
Yep.
So definitely make sure you're reaching out to us on that.
Awesome stuff. Becky Ailey, thanks for joining us on this show. Of course, you can find Becky, Lisa Lawson, myself, Harvey Freed, Harry Glantz, all at Capital Mortgage Funding at 1-800-LOW-RATE, the best mortgage banker. We'll definitely set you up with Matt Bush. Matt, thanks for joining us.
Hey, who you worked with matters. Follow me at My First House, MI First House.
MI First House. All right, Matt Bush, Remax First. Thanks for joining us
Thanks
again.
for having me, guys.
We'll see y'all next Saturday. We got Pat Caputo coming up. Football,
Go
baseball,
Tigers.
basketball. See you soon.